Welcome back to another Tech Talk from MarketEdge.com, your source for unbiased technical stock research on over 5,000 stocks and ETFs. My name's Rachel, and with me today is David Blake, CMT, here to discuss what happened in the market last week and what we should be looking for as we continue through this week. David, how's it going today?
I'm doing well, thank you.
Good, let's jump right in.
Okay. We had a pretty volatile week again, as it seems all of them are lately, but the major averages were lower last week. The Dow Jones and the Russell 2000 were down for a third consecutive week, and the S&P 500 and NASDAQ ended the period down for a second straight week. But anyway, we started on a soft note last week. On Tuesday, we had kind of a bounce led by the Semiconductor Index. It seems that the semiconductors chips seem to be pulling this market higher and lower almost on a daily basis. But the SOX, or the Semiconductor Index, it did rebound on Tuesday. It was up 5.21%. That was basically after it had fallen into a bear market on Monday, down 20% as we started the week. We had big moves back into Micron, SanDisk, and the memory chip makers seem to be the ones that are outperforming. They were up more than 12% individually themselves. So that snapped a 3-day losing streak for the NASDAQ. This rotation we talk about every week, and often I talk about it in the daily commentary, this rotation out of tech and into cyclical and some defensive areas of the market, it continues to happen. And that just means that we're seeing a lot of goods being produced here in the United States that is helping keep the economy strong. Okay, the problem with the last week is about midweek, with all this bombing going on here between the U.S. and Iran, we did see oil prices spike higher. That causes yields to move a little bit higher to fight inflation. And the 10-year actually got up to its highest level since January 2025. It got up to 466, and it closed the week at 468. So again, that was the highest since January 2025. We also had a bump higher in the 2-year. So that was something to look at. And then, Brent crossed above $100 that day. And the funny thing was the prior week, when we had the CPI and the PPI that came in lower than estimated, the FedWatch group actually was projecting about a 38% chance of the Fed hiking rates at this week's FOMC meeting. And after that CPI and PPI print, it fell all the way down to 12.8%, which basically they took the rate hike off the table. Well, this week with the oil prices jumping back up again, as of today, when I look just a little bit, there's about a 40% probability that we'll see a rate hike tomorrow. Now, I got to tell you, rarely do you see that much uncertainty going into an FOMC meeting about what they're going to do with rates. I mean, normally by now, Wall Street has it pretty much figured out and it goes as expected, and they're very rarely surprised. But the talking heads I hear from the analysts and all, they really don't know. So if they do hike rates, I do think you'll see probably a gap down in the market, which I think would probably represent a buying opportunity. We'll have to see how the market will react to unchanged. Will probably depend on Fed Chair Warsh's comments at 2:30. So you may want to listen to that, or at least listen to what he has to say and see how dovish or hawkish he is going forward. Anyway, we had a lot of earnings come out last week. It's the cyclicals like General Motors, 3M, RTX, Lockheed Martin, Honeywell. They came out with solid gains after reporting earnings that beat estimates. And then you go on the other side where you have the AI spenders, the CapEx spending companies, which investors are still concerned about that, with Google or Alphabet, Tesla, Intel. Even though they had solid earnings, the fact that they keep raising this CapEx spending hurt the stocks, and they all traded lower after they released earnings. It's in some cases, they were up to 20, 30%. So you're going to see that going forward. This week, we also will see earnings coming out today. We saw earnings coming out from Boeing, Coca-Cola, and Visa. Boeing and Coca-Cola actually were up after announcing earnings. Boeing actually was at a loss, but it did trade higher. Tomorrow, we have earnings from Meta Platforms, Microsoft, Procter & Gamble, Starbucks. And then Wednesday, we have Apple and Amazon and MasterCard. And then we end the week with Chevron, ExxonMobil. Hard to say how they'll respond with the swing in oil prices going forward. Now, as far as the technical condition of the market goes, we're seeing some deterioration, but it's really a split market. Even today, as we're talking, I noticed that the Dow Jones was up about 250 points and the NASDAQ was down about 200 some points. again, it's a sell-off in the chips and tech areas, although we are seeing buying into software stocks coming in. But you look at some of the ETFs like the ITA, the aerospace and defense, or the ITB, the home building, the U.S. construction ETFs, they're actually doing pretty well. So those cyclical areas of the market are still where you want to keep looking if you're putting money into the market. And some people are. It's not like you're seeing a sell-off in the NASDAQ and they're going to the sidelines. They actually are moving that money into more cyclical areas of the market. Now, this morning, you had the NASDAQ 100, both fell below their 100-day moving average, which is not a good sign to see. And then you had the Philly Semi-SOX Index. It came right down to the 100-day moving average, and so far it held it. You also had the Russell 2000 come down, and it seems to find support pretty regularly at the 50-day moving average. I think the last 3-4 days in a row, it's come down there and kind of bounced around that moving average line. So that's something you want to kind of watch. Interesting enough, when we talk about rotation and you think, well, okay, is the market getting ready to roll over? The equal weight S&P 500, that's RSP is the ETF. It actually is at a new high today. So as you can see, that the money's not leaving the market and going into cash as they're selling the tech stocks and chip stocks are rolling into the financials and the materials and the consumer staples, some of the utilities, that type of thing. We talked last week about how energy was outperforming. I'm sure energy is getting hit pretty hard this week. But last week, even with the market down, 8 of 11 market groups were higher. Today, with the NASDAQ down and almost every other index up, you have 9 of 11 sectors are higher. So that's not the signs of a market that people are looking at and saying, I got to get out of here. I want to sell this thing and, move to the sidelines and see what happens. They seem to be comfortable with what's going on with the broader economy. And in fact, yesterday, we had a 9.3% spike in June core capital good orders. That's also a very strong sign. That's up from where it was in May, but a 9.3% jump in capital good orders is strong. That's people are buying manufacturing things here in the United States. Today, we had consumer confidence come out. It backed off a little bit from June. It fell to 90.8. They were looking for 92. Not a big deal. The technical indicators, they're also mixed. You have the different indexes diverging from each other. Of course, you're going to have some of the indicators showing some positive momentum, the other ones falling into negative territory. And that's exactly what you see when you pull these things up. I would say one of the things you want to watch is the 14-day RSI on some of these. You can find that in here in our charts. Let me take a look here. Okay, if we go in here and we look at 1Q, which is the regular NASDAQ, and if you come over here and look at the 14-day RSI, you can see it dropping down, slowly, just getting softer and softer. And yesterday we finished up at 38.17. Now, Connie Brown is a technical analyst here in Atlanta, and she does a lot of work with the 14-day RSI. And she has found that once you see the 14-day RSI fall below 40 for like 2 or 3 days, then that's a sign that maybe not the major trend, but the intermediate trend has changed. And then when you see a bounce, if it stops at around 65 and then starts to pull back again, that means that downtrend is still in place. So if we continue to work our way lower on this 14-day RSI, that will be something you want to watch. And then maybe you look at the, do I have the 100-day up here? I don't think I do. No, I don't. I'm going to go ahead and put the 100-day moving average up here so you can see where we are. As you can see on, what is this, yesterday, 27th? Yeah. So you can see yesterday, the NASDAQ came right down to it, hit the 100-day moving average. And, traders watch that. They look to see if it cuts through like a knife, they short the heck out of it. If it can bounce like it does here, you'll get some money going in there. Today, we did break below it, but not by much. But the more swing traders will kind of give it a 2 or 3 day watch before they, if we go down and we stay below that 100-day for 3 days, you might get more swing traders starting to short that. If it bounces right back, you might get guys testing the support level and buying it. So that's just something to watch. Again, I saw the SOX found support at that today. It's holding it right now. Next support on the NASDAQ is going to be down here. And there's something that's very interesting about this line right here. Okay, we have the 200-day moving average, but if you come back this way, Let me take the tooltip off here real quick. But come back this way now. Okay, look what happened at that 200-day move where we are right now. Back in October, back in January, November, that is where the NASDAQ ran into resistance. Now, what happens a lot with technical analysis is the old resistance now becomes support. And I think actually, if we do get a sell-off tomorrow, if rates go up, that would be where you would probably look to, if you're just watching this thing and looking for a place that you want to go into the NASDAQ for later on, that would probably be a space to watch it. If it holds there, well, that's probably about where we're going to find support going forward over the near term, maybe even the longer term. So that's where I am looking to see. If I get that, then I will definitely put money to work, maybe in the S&P 500 and NASDAQ or whatever. So that's something you can follow on the charts, which is a good signal for you to go in and out of the market. Okay, let's take a look. I did talk about most of the sectors that we follow on MarketEdge are rated long. I think it was 8 of 11 are rated long. We have the utilities, industrials, REITs, materials, they're all strong. You did get a sell-off in communication services, and that was because of the big drop in Alphabet last week, but it seems to be bouncing back, that and Meta. We'll see how that plays out. You may want to give that a little bit of room, see how we are that. But the financials look very good in here. And let me see the IGV on this chart here. That's the software thing. Just so you see it's not all tech. Okay, you had a bounce in the software. You came back down here, kind of found support at the 100-day moving average. I talked about that. Sometimes you want to watch 3 days. Okay, here you had 2 days where you were messing around with it. It seems to have held. You had a bounce there, and you also have a bounce today in the software. I know Salesforce, Microsoft, some of the other ones there are actually up today. So maybe the software stocks are starting to rebound. And in that case, you want to kind of watch this 200-day moving average here, and you also want to watch where the rally stalled out before. So that would give you something else to watch. But it's not everything tech that's falling apart. It's mainly just the chips that had that parabolic. We talked several times that these parabolic moves in a stock or an index rarely end up nicely. At some point when they have that move, you're getting some very big traders starting to short the heck out of it. I actually bought a SOXS, which is a triple leverage short semiconductor. I bought it at $5 and sold it at $5.40. Well, it's at $65 today. So, it's easy to get scared out of those, because if you're on the wrong side, you can obviously lose a lot of money very quickly. But that just goes to show you that the money has been piling into that. Okay, just to kind of wrap things up, I wanted to just mention that we did see a big pullback in sentiment for the different traders, especially in retail. Retail traders fell all the way back down where you had actually we went from 44.9% bulls and retail investors that fell all the way back down to 29.6. I mean, that's a huge drop. You rarely see something that, that much, go down like that. So the retail clients got kind of scared when they saw oil jumping up there with the Brent over 100. We'll see how they react this week. But you might see a little bit more going in. But I think a lot of people were probably going to wait to see what happens tomorrow before they wager a little bit of a bet, because it's just too much up in the air as whether or not we're going to get a rate hike or not. So keep an eye on that. We also saw a pullback in the investment managers. They went from 96% all the way back down to 4%. So they're a little bit hesitant. They want to see what's going to happen tomorrow. And then this week on Wednesday, the FOMC meeting will announce at about 2 o'clock rate hikes. Then we get the 2:30 announcement from Fed Chair Warsh. And then on Thursday, the day after, unfortunately, you get the PCE out, and that is the personal consumption expenditures, which is the Fed's favorite inflation gauge. And again, unfortunately, it's a day after their meeting, but we're looking for right now for about a 3.7% year-over-year increase. It's a little bit less than what it was in May. This would be for June. And then the core PC is expected to be up about 3.3%, and that's compared to about 3.4% in May. We'll have to see how they respond to the oil prices jumping up again here a couple of weeks ago. And other than that, I think just kind of see how we go with some of the Mag 7 stocks actually coming out here with their earnings this week, with the Amazon and Meta and stuff like that. We could have some volatility, especially the NASDAQ, where it's being whipped up and down. But just keep your eyes on that RSP, the equal weight S&P 500, because as I said, that's making a new high today. And I would think that if we do get a gap down in some of these indexes tomorrow afternoon, I think you may want to put some money if we hold that 200-day moving average. You can draw the lines on our smart chart to see where previous levels of resistance were, because they now become support. And that might be a little place where you can put some money to work. So other than that, again, it's a mixed market. You have the indexes diverging from one another. And that when that happens, one of them will win this tug of war, and we'll have to see which one doesn't. But other than that, I think just see what the Fed does tomorrow afternoon, and we can go from there.
Very good. Thank you so much, David. If you have questions for David or anyone else on the MarketEdge team, feel free to reach out by dropping an email to support@marketedge.com or leave a comment if you're watching on YouTube. That's it for this week. Thanks so much for watching. Don't forget to like and subscribe, and we'll catch you next time.